Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day. It's December 12th here on Wednesday. And we got just a couple economic news releases to go over. Actually, just one, but it's split into two. We got the headline number of the Consumer Price Index, also known as the CPI. This is the inflation number for the consumer side. So this is kind of one of the two inflation numbers that we really look at. And October had a pretty good spike. It went up 0.3%. And the forecast for November was supposed to be nil, and it came in nil. And this is primarily because we had a spike in oil prices going up in October, and then in November, oil price came down. So it was up in like the $80 range for per barrel, and now it's down to like the $50 range, which has really kind of helped out, consumers and everybody else. Now, when you strip out items like food and energy, we get what they call the core CPI, and this is really the number that the Fed will look at and most economists will look at primarily because food and energy are stuff are variables in the equation that we just can't control it. So they want to have a basis to review where the inflation's at, and this is kind of what they will look at. So with that in mind, we had a 0.2% increase in October, and forecast for November was 0.2%, and it came in in line with expectation of 0.2%. So what does this mean year over year? Now, the headline number here dropped. It was at year over year of 2.5% in October, and it dropped to 2.2%. However, the core CPI went from 2.1% and went up to 2.2%. So both currently are residing at 2.2% here. So let's kind of jump over here to the headline news. The stock market is up quite a bit, over 300 thus far, and it's taking its news on the U.S.-China trade negotiations here. A lot more optimism is popping up here. So we have both parties speaking at the table here. One of the news developments that came in was in Canada, the CFO for Huawei is out on bail right now. President Trump, I guess, is even did a report, interview with Reuters and basically had said that he would intervene if necessary in order to get if it seemed like we could get a deal done with China. So that's creating a lot more optimism in the markets, and this is what's kind of again what's moving it. Now, one correction I kind of want to make in there. I kind of mentioned that they were in they themselves, Huawei was in some past recordings that they the reason why she was being held up was because they themselves went over to Iran, were dealing with Iran. Apparently what it is that their company, Huawei, she apparently lied to banks about them dealing with a firm that went to dealing with Iran. So they themselves directly, it didn't sound like they went to Iran. They were dealing with another firm that was dealing with Iran. And apparently she lied to the banks about that. And that's the reason why she was being detained by the U.S. for breaking sanctions against Iran. So let's kind of move forward here, see how this is affecting the bond market. And the bond market, as you can see, it started lower. We got this double line of support here around the 101 level here. Now we're currently up about even unchanged levels here where we left off here. Now yesterday we did have a what they call bond rollover, and that was it equated about 6 basis points lower. So it doesn't affect pricing at all, but just give you a heads up. So don't worry about even though it looks a little bit further down. It was because we had a bond rollover, which we happen every month. We have at least one bond rollover, and that is due to because they have like basically a reset button when they package up these mortgage-backed securities over 30 days. They package them up and resell them, and then they kind of reset the pricing here. And it has no effect on our rate sheet pricing for interest rates here. So don't be concerned. But right now we're at about unchanged levels from yesterday. All right, so let's kind of jump ahead here and let's kind of look at it. So as you can see here, we're starting to get that crossover we were talking about because we're in that sold position here, and we're trying to get down to this level here. So this may hold here, so we'll have to kind of wait and see. This double support could potentially hold. It should be a pretty strong support, but just in case, we want to be, again, you guys want your finger on the trigger because if we break below this, it's a pretty long ways down there from the 101 to about the, what do we say, 100.25. So it's about 75 basis points here, which is equals to about 3/4 of a point. So be cautious here. I always urge caution. And here, the Treasury, as you can see, is starting to form again, a crossover here in an overbought position. And to bring this up here, We bounced on this line of support here at the 2.85 on the Treasury here. It's got some room here to the 200-day moving average. We're currently up to about 2.9 on the yields, on the 10-year yields. So again, something to kind of watch for. But right now, rates are about the same as what we left off yesterday. There shouldn't be any change in pricing in terms of interest rates today. If there's any change in the market, I will definitely post on Twitter. It's just easier for me to post on Twitter on a real live basis. You can follow me at Mike Bjork and get any updates that I may put up through there. You guys have a great rest of your day. Thanks so much for watching. I look forward to see you guys tomorrow. Bye-bye.